There is so much demand to access Bitcoin from institutional investors and companies. It's outweighing the supply of new Bitcoin by a factor of 5 or 6 to 1. Bitcoin's already had a good year, but I think particularly as we get into the fall and institutional allocations heat up, as major wirehouses like Wells Fargo and Morgan Stanley start accessing Bitcoin, I think we have the potential to rip to 200,000 or beyond. I know it's a long way from here, but I think we're getting there this year. I think it's going to go up in 2026. He's absolutely right that for the last 4 years, in 2022, 2018, and 2014, there were big pullbacks in the crypto market, and Bitcoin did fall 60 or 70% in those years. But that's not a guarantee it will happen in the future. When I look at the market, I see the factors that drove that historical 4-year cycle, like the halving and interest rate cycles, being weaker right now. And at the same time, we have institutional capital moving into the market that's going to take 5 to 10 years.
One of the most widespread misconceptions in cryptocurrency markets is that Bitcoin is always stuck in a predictable cycle of booms and busts. Matt Hougan questions this notion. Every significant advance was followed by the predicted 60 to 70% falls, which investors had been preparing for years. Hougan contends, however, that the market's basis is different this time. In contrast to previous cycles that were influenced by Federal Reserve policies and halving events, institutional adoption, ETF inflows, and the widespread acceptance of Bitcoin as a valid asset class are the main new forces influencing the current environment. He claims that because of these structural changes, it is much less likely that Bitcoin will recur its previous trends. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
In the headline, how would you describe your purpose in this memo? And then I want to break it down.
Yeah, absolutely. I see all sorts of people looking at the current financial market and saying it's good enough, saying that it's good enough that our bank accounts pay us no interest. It's good enough that stocks only trade 9:30 to 4 p.m. It's good enough that we pay a 2% fee every time we use our Visa card. And I want to cry for those people. The financial system can be better. It can be 24/7, 365. It can be global. It can be frictionless. We can have better money. The reason why crypto is the only technology we have that offers us the opportunities to significantly upgrade the financial ecosystem. And I was trying to point out in that memo that that's possible and that there's a better world on the other side if we can get there. I think it's going to go up in 2026. He's absolutely right that for the last 4 years, in 2022, 2018, and 2014, there were big pullbacks in the crypto market, and Bitcoin did fall 60 or 70% in those years. But that's not a guarantee it will happen in the future. When I look at the market, I see the factors that drove that historical 4-year cycle, like the halving and interest rate cycles, being weaker right now. And at the same time, we have institutional capital moving into the market that's going to take 5 to 10 years. And I just think that institutional capital will overwhelm that historical cycle. Does that mean we've repealed volatility? Absolutely not. Could Bitcoin fall 30 or 40% even? That's certainly possible. I don't think we're going to fall 70%, and I think we'll post positive returns in 2026. So I guess I'll take the other side of that bet. There is so much demand to access Bitcoin from institutional investors and companies. It's outweighing the supply of new Bitcoin by a factor of 5 or 6 to 1. Bitcoin's already had a good year, but I think particularly as we get into the fall and institutional allocations heat up, as major wirehouses like Wells Fargo and Morgan Stanley start accessing Bitcoin, I think we have the potential to rip to 200,000 or beyond. I know it's a long way from here, but I think we're getting there this year. I think what you're going to see in the altcoin market is a real differentiation between coins that are gaining fundamental traction in terms of use and applications, and coins that aren't gaining any traction. So historically, altcoins have kind of moved all in sync, either all up or all down. Bitcoin and Solana and XRP and Cardano all moving together. As we enter this more fundamental era of crypto where it's really disrupting traditional finance, I think you'll have winners and losers, but the winners are going to win big. If I look at Ethereum right now, I think it has tremendous tailwinds behind it that aren't priced into the market. So I'd put that into the probable winner camp. But not every altcoin will rally. Some will and some won't. Stripe spent over $1 billion, one of the largest payments companies in the world, spent over $1 billion to buy a stablecoin infrastructure provider that lets companies and other industries invoice and receive payment from places around the world. Things like Starlink, Elon Musk's satellite internet company, uses Bridge to invoice people around the world. And Stripe thought this is going to be a big business. What that means for you is this is a major institution saying stablecoins are a big part of our financial future. How do you benefit from it? You have two ways. One, you could buy Ethereum, which is the primary blockchain on which stablecoins move, or you can buy companies that are building these stablecoins like Circle, or an ETF like our BITQ ETF that owns these kinds of companies. Either way, BITQ or Circle or ETH, you're getting exposure to this stablecoin growth, which I think is going to be a multi-year story measured in many trillions of dollars and is an enormous opportunity. A stablecoin is a digital dollar that moves over blockchains, kind of like a money market fund, but it doesn't pay interest and it moves over blockchains. Its primary use is in crypto trading or in international commerce or from people in emerging market countries that want access to the dollar. You can't invest or you won't earn any by just buying a stable coin because by definition, it stays stable, right? It'll sit at $1. So you need to invest in the companies that are building these stable coins, companies like Circle and Coinbase, or on the rails that these stable coins move. As an example, every time someone sends a stable coin, if I were to send you money in a stable coin, Adam, I would send it over the Ethereum blockchain. I'd pay a small fee in Ethereum. If you think 100 times more people are going to be doing that in the future, maybe you want to own some Ethereum to benefit from all that fee activity. So buy the companies or buy the blockchain, or maybe just buy both.
According to Matt Hougan, this new strategy tackles the majority of the historical hazards associated with stablecoins, such as the demise of Terra Luna. The system is far more stable when only safe dollar-backed tokens are used. As with any new technology, there are still risks, of course, but Hougan likens it to the early days of email and online trade. Even if there were flash crashes, scams, and a lot of mistrust back then, the overall advancement was indisputable. A treasury-backed stablecoin is far safer and more dependable than banks, which can fail because of mismatched loans, as was the case with Silicon Valley Bank. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
What do you see as the risks?
Yeah, I think it depends on how you want to measure risk. I think there's risk for companies building in this space. It's a new market. It's an emerging market. It's not clear who the winners will be. Will it be crypto native companies like Circle, or will it be JP Morgan when they come into the market with a stablecoin? That's a risk as an investor. In terms of the risks for the banking and financial payment system, I think it's mostly all upside. I think this is just a more efficient way to move money. It's a little bit like saying, what are the risks of email? Well, the risk was it would disrupt the postal service, but email itself was just a better way to transmit information. Stablecoins are just a better way to move money over the internet. And I think it's mostly upside for the world. Well, any technological change comes with risk, right? When we moved from trading stocks on the floor of the New York Stock Exchange to the electronic markets, that made the market much more efficient, lower cost. It improved liquidity for every investor. But it did come with some risk. We had risks. We had things like the flash crash, right? That wouldn't have happened in a floor-based system. So there are always risks when you try to improve things. But the question you should ask is whether the benefits outweigh those risks, right? It certainly did when we moved from floor trading to online stock trading, from full cost brokerage to low cost brokerage. And I would argue it will in crypto as well. Now, saying that, I'm not being Pollyanna. I can look back at crypto and there have been plenty of reasons to be concerned about this industry, right? We've had FTX, we've had custodians blow up. There's been a lot of fraudulent activity. I think it's hard for people to recognize that we can solve those risks through better regulation and then harvest the benefits on the other side of this incredible technology. This is exactly why the Genius Act is so important, because what you're describing is what crypto entrepreneurs were trying to do with stablecoins in the past. The way the Genius Act worked is the only thing that can be a stablecoin is something that's backed 1-for-1 with short-term US treasuries. So instead of holding Adam's altcoin, it holds, 30 to 90-day duration short-term US treasuries, which are the most secure asset in the world, and it's backed on a 1-for-1 basis. So exactly the risk you're calling out is why historically stablecoins were risky. There was the Luna stablecoin, which blew up. There were a number of other issues. Once we get into this new regulated format under the Genius Act, that goes away. The only thing that's a stablecoin is something where I deposit $1, I give you short-term treasuries, and you issue me a digital representation, and you can always go back and forth. So that should fix that problem. That's why this bill is so important. Yeah, I mean, that is one risk that people have called out. If stablecoins come to be a huge share of the US Treasury market and people want to cash out of that, could that interest sort of create interest rate volatility? But you're trading risks there, right? There is that risk in the US banking system right now, except it's much worse. When you have a deposit at a bank, they may make a long-term loan, and then if people ask for their money back, the government has to bail them out. We saw that with Silicon Valley Bank. So you could see, I guess, a little bit of volatility in the short-term treasury market, but it's the most liquid market in the world. And you're trading that versus the volatility you saw in the traditional banking system, where banks fail pretty regularly and we're forced to bail them out. That's a trade I would make. That's an upgrade in my view.
The reason Matt Hougan's message is so potent is that it questions the notion that our current financial system is good enough. The majority of people, he notes, have come to terms with things like being limited to outmoded market hours, paying exorbitant costs for each transaction, and receiving little interest on their funds. The opportunity to fully reinvent the system to make it faster, more equitable, worldwide, and accessible around the clock is what cryptocurrency offers, though. He clarifies that digital assets like stablecoins, Ethereum, and Bitcoin are not merely vehicles for speculation, but rather actual innovations that have the power to change the way money moves globally. According to Hougan, institutional demand for Bitcoin is currently so high that it greatly exceeds supply. Because of this, he believes that Bitcoin might hit $200,000 or higher when major banks like Morgan Stanley and Wells Fargo allow regular investors to participate. He also emphasizes that the cryptocurrency industry is entering a new phase in which only projects with practical applications and widespread adoption will endure, with Ethereum standing out as a promising long-term growth contender. According to him, stablecoins might be the most obvious indication of cryptocurrency's potential involvement in international finance. Because stablecoins offer a superior way to transfer and receive money internationally, companies like Stripe are already investing billions of dollars. The takeaway is simple. Crypto is no longer just about speculation, it's about building a better financial future. Bitcoin could become the backbone of global value storage. Ethereum could power trillions in stablecoin transactions, and stablecoins themselves could revolutionize payments like email revolutionized communication. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.